Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, September 29, 2010. Let's start with the euro-dollar pair, where we saw the dollar falling as well as it declined against most of its other major rivals on the assumption that Federal Reserve stimulus remains more a question of when, not if, at this point. The dollar now stands at its lowest level against the euro since April and has breached the 1.36 area, which was our resistance or our high in yesterday's session. Building on a consistent narrative, the euro's rise has been a direct manifestation of concern regarding the Fed amping liquidity in the market and devaluing the dollar. European consumer confidence, which came out in today's session, this label is for the US consumer confidence from yesterday, did come in a little stronger than expected, but analysts were not hanging their hat on the data as any particular signal of strength. Meanwhile, the Irish government is expected to release a statement, perhaps as early as Thursday, detailing its plans for dealing with the liabilities of its beleaguered Anglo-Irish bank. There is also attention centered on possible Eurozone bailouts and proposed European Commission legislation, which is keeping some of the common currencies gains in check in today's trading. Looking at one of our currency pairs most closely tied to global growth and risk sentiment, the Australian dollar US dollar, we see the Aussie continuing to climb, pushing above the 0.97 level in today's trading. It steadily continues to march higher towards its 2008 highs at around the 0.9850 level. The pair broke above its resistance from last week at around 0.96 and is currently rallying in an upward sloping channel. Zooming into today's price action, we see that the greenback did pair some of its earlier losses to the greenback as US stocks started lower, which increased the risk aversion. But as we can see, the Aussie did manage to rebound from that slide by noon New York time, and we are trading around the 0.97 level as of 2:30 p.m. Eastern. Data from China showed that the manufacturing sector accelerated for a second month in September. According to the HSBC manufacturing PMI, it rose to 52.9 from August 51.9, where the 50 level is the break-even point between expansion and contraction. So we see that did give the pair a bit of a boost, as an increase in manufacturing activity means that China will continue to demand Australian raw materials like coal and iron ore. Turning to the dollar-yen pair, we see it extending its decline from yesterday's session, testing the area at 83.50 in today's trading. So that continues to push to our lowest level since the Japanese government's massive 2 trillion yen intervention on September 15th. The yen gained amid a positive day for Asian stock markets and better than expected business sentiment in the Bank of Japan's quarterly Tenkan survey. We now approach levels close to where we might see the Bank of Japan deciding to intervene to defend its currency. It did so last time when we hit the 83 level, so we'll continue to monitor this as the yen continues to strengthen. Taking a look at that data from Japan, we see that the Tenkan index of large manufacturers sentiment climbed 7 points in September to register a reading of 8, though this was the lowest increase since early of 2009. While the figure was better than expected, as was the non-manufacturing index reading, the outlook for the large manufacturing firms turned negative at -1, a weaker than expected reading. Stagnant sentiment adds to the case for the Bank of Japan to ease monetary policy as Prime Minister Naoto Kan compiles a stimulus plan to counter the effect of the yen's 10% surge against the dollar this year. In the pound-dollar pair, we saw continued consolidation, with the pair staying within its trading range from yesterday's trading session. The pound was weaker yesterday following Bank of England policymaker Adam Posen's comments that officials should restart their bond purchase plans in order to aid growth. If the Bank of England decided on more quantitative easing, that mitigates some of the weakness for the US dollar from the expectation of the Fed's upcoming quantitative easing. And overnight, we did see the greenback actually gaining as the pair moved below the 1.58 level during the New York's trading session. Looking at the euro-pound pair, we see the pound continuing to weaken against the euro, and it's actually falling to its weakest level in more than 4 months, as we did have a report from the UK showing UK mortgage approvals falling for a 4th month in August, adding to signs that the recovery is faltering. Taking a look at the daily time frame in this pair, we can see that we've retraced more than 50% of the full swing in this pair from mid-March to early July, and we have also moved above the 200 period moving average in this pair, the daily moving average. Let's take a look at the aforementioned UK mortgage release. We saw that UK lenders granted 47,300 loans to buy homes, compared with the revised 48,400 in July, according to the Bank of England. Economists had forecast that approvals would decrease to 47,000 from initially reported 48,700 in July. However, the lending figures also show that mortgages' consumer appetite for secured credit did rise in August, as total consumer lending increased £1.54 billion, the largest rise since February this year. The increase in August was due to a big pickup in mortgage lending, which grew by £1.7 billion, also the biggest gain since February. Now, the more forward-looking mortgage approvals data was down, which suggests that the surprisingly strong August mortgage lending is likely to be short-lived. Also, in a second report, we saw that a measure of UK services, which amounts for 3/4 of the economy, shrank 0.2% from the previous month when they declined by the same amount. When viewed on a smoother 3-month-on-3-month basis, the measure preferred by the Office of National Statistics, because its series can be volatile, the picture looks a bit healthier. Services grew by 0.5%, though that's the lowest since the first quarter. Overall, the data provides the first glimpse of slowing growth in the third quarter in the UK, as the economy had grown the most in 9 years in the 3 months through June or in the second quarter. The recovery, therefore, may moderate further as the government implements the biggest public spending squeeze since World War II. So that, in combination with the news about the increased chance of quantitative easing, has been pressuring the pound this week. Taking a look at the US dollar Canadian dollar, even though the dollar was on a defensive early on in the session as oil prices rose, we did see that once we tested the 1.0250 area, the greenback actually rebounded and recouped all of its losses from overnight, and we were trading above 1.03 in late New York afternoon trading. Oil prices were up 2.4% on the day, while U.S. stocks, which had sunk in the beginning of New York trading and perhaps causing some of this move in favor of the greenback on risk aversion, did manage to battle back and to trade pretty much even heading into the close of today's equities trading. Overall, though, for this pair, we continue to be trading within this range that we've seen over the past 3 weeks. So we need to look for it to break either the resistance or support levels before a new direction can happen for this pair. We did have some data from Canada, as the industrial product prices for August rose 0.4% over the previous month, which exceeded the 0.2% increase that economists had been expecting. Raw material prices were up 2.2% in August, far exceeding the 0.5% increase that was expected. So an increase of producer inflation could filter down to higher consumer inflation in the coming months. And that does it for today's data and market highlights. Let's take a look at the upcoming fundamental docket. It's going to be rather busy, especially tonight. As first, we start off with New Zealand's building approvals. We get a measure of consumer confidence from the UK. Japan posts its manufacturing PMI, a preliminary reading of industrial production, as well as retail sales. Australia posts its building approvals, a measure of private sector credit, and the Reserve Bank of Australia releases its financial stability report. Then at 10 p.m., New Zealand then posts its business confidence. So a pretty busy day in the Asian Pacific region. Overnight, Japan continues its releases with its housing starts. We get nationwide housing price index from the UK. Germany releases its unemployment change, and the Eurozone posts its preliminary reading of consumer inflation. Tomorrow in the US, we get data on jobless claims, as well as the final version of second quarter GDP. At the same time, we get Canadian monthly GDP figures, and at 10 a.m. US, Fed Chairman Bernanke testifies in front of Congress on the new financial regulations bill. And that will wrap up today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.